All right, guys, another great day comes to an end. Hope you guys had a fantastic day. Hope you made some money out there. Hope you enjoyed the weekend. It's Monday evening, though. It's time to get back to work. Tuesday is right around the corner. We have a lot to cover in a very important video here tonight. Got a bunch of ranges on the S&P and the NASDAQ. You know me. I love me some range-bound markets. We got, a wild session the last couple of days on crude oil, but I think we're going to cover, by the end of the video tonight, you have a pretty good game plan to make some money on oil. In fact, in tonight's video, I'm going to cover all my favorite trades that we have a game plan to make some money on Tuesday. Before we jump in and get the game going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy the video tonight, as always, do me a favor, hit that like button. Give me a shout out in the comment section below. Thank you so much for stopping by, tuning in, supporting the channel. But enough of the intro, right? Let's get ready for Tuesday. Got some really nice trades after those big moves we saw last week here. So where is the easy money to be made tomorrow across these three markets? Well, again, the S&P and NASDAQ, bunch of ranges, right? Range on the S&P kind of smells like a range right now forming on the NASDAQ. I'll tell you, when it comes to the S&P and the NASDAQ, the word bear trap, right? The word bear trap comes to mind, not only for pullbacks, but also for breakouts. I mean, there's a lot of great bear traps I'm tracking on the S&P and NASDAQ for tomorrow. We're going to go over all that stuff to give you guys a game plan in the video. Over on oil, boy, oil's a wild one. We're very bullish in the short term, but I'll tell you though, we're running right into some levels that would make perfect sense for some reversals, back down again. Talking about bear traps on the S&P and the NASDAQ, this might be a beautiful spot for a bull trap and a reversal back down into that 68.5 level here on the oil. So we're going to cover a lot of great trades I'm tracking here for Tuesday. Now, before we jump in though and talk about each of these three markets to get our hands dirty on these charts tonight, let's all make sure we get on the same page for tomorrow. There's no major news on the schedule for tomorrow. However, you probably heard last week, Janet Yellen spooked the markets on Tuesday about the debt ceiling in the U.S. running out of money in June, right? Well, tomorrow we're going to have a big, probably one of the biggest, most anticipated events of the week. Tomorrow afternoon, 4 p.m. Eastern time, we've got supposedly, that of course assumes that President Biden doesn't fall asleep and miss the meeting tomorrow afternoon. I digress though. 4 p.m. Eastern time, a debt ceiling meeting on Capitol Hill between the U.S. President Biden and I believe McCarthy, McConnell, I believe all the big heads right on both sides of the aisle will be there. That I assume is something people will be listening in to hear the reaction. The anticipation of that tomorrow afternoon may be a bit of the reason the markets were a bit choppy and sloppy and quiet here today. Now, of course, later on in the week, we get the big news, right? You could arguably say the biggest news of the week is that CPI number at 8:30 Eastern time on Wednesday. We'll come back tomorrow night, obviously, and put a game plan together for CPI Wednesday. These have been very, very busy days in our trade room. So very excited for CPI on Wednesday, the cousin PPI on Thursday. But for tomorrow, remember, 4 p.m. Eastern time tomorrow afternoon. It's too bad that news report isn't all the way to the end of the day tomorrow, so keep that on your radar. Not a lot of the stuff acting as catalysts. Now back to our charts, right? The money is made on the charts, and as always, if you like making money, I would definitely recommend you watch the video all the way to the end tonight, because every trade I talk about can be applied to your favorite market. Let's go S&P, let's go NASDAQ, and we'll wrap things up here on the crude oil. Before we jump in, don't forget these are tick charts. You can see all the exact time frames in the upper left-hand corner. This is the 21 EMA. It's not the only indicator we use in our trade room, but it's one of the most important, so you want to make sure you're aware of that. And then as always, down the description of the YouTube video, I'm going to put some 60-minute charts and some 4-hour charts linked up in the description of the video. I like to use especially the 60-minute chart to give me an overall directional filter, and that helps me identify where the best entries, exits, and trade setups are going to be here for tomorrow. So if you want to see a bit of a bird's eye view or a different way to look at these markets right now, definitely check out those links linked up in the description of the YouTube video. With that said, what is the most important factor right now that's tipping us off to the best trades for Tuesday morning? There are ultimately two big factors that are kind of telling me where to look for my favorite trades for tomorrow. The first big factor is the size of this move we saw last Friday. That's a very big move. Anytime we see a real big move like this, we have to expect that buyers are probably a little bit weary of buying high, right? And they love to get some nice deep pullback to buy nice and low, right? A place where they can risk small to earn large, right? So this is definitely one thing that I think is a big factor in this. The size of that move, it definitely gives the buyers the overall directional bias right now. I'd love to be a buyer, but it wouldn't surprise me if we saw a relatively sharp pullback here, not a reversal, right? But a deep enough pullback to attract buyers right into the market at a decent price, right? At a price that could actually get a good reward on for move back to the high. Now, on the same topic of that, if the market was to go higher here, right? If we were to keep fluttering higher, it might not be a great idea to get too aggressive up there, right? Because, that potential for that sharp pullback may definitely be there at some point. So that's one thing on my radar right now. Another, which you could probably say is even more important, is this trading range. Now, in my trade room, we call these directional ranges, right? It's a bull move up into a range. Now, when it comes to bullish ranges like this, the first thing is that ranges act like magnets, okay? And really my two favorite trades in a bullish range is to find support levels down below the range and buy pullbacks. Again, if we understand the directional move, right, is the bias and the range acts like a magnet, I'd like to buy off support below the trading range. That goes right along with the game plan we talked about because of that big move. And then kind of the second way you want to trade a range in a bullish market like this is a breakout, right? Now, there are two different types of breakouts that we can look for, and we're going to talk about those two different types of breakout patterns and the breakout fundamentals. We'll talk about that a bit later on in the video. But breakouts, right, are definitely going to be something we're looking for as we go. And I'll tell you, that could easily happen tomorrow because we have quite a bit of open space above us. This is one key difference between the S&P and NASDAQ. The S&P would love to break out and take out their big objective tomorrow around that 42.06 and a quarter. So knowing these two factors, my favorite trades on really both the S&P and the NASDAQ for tomorrow are going to be getting deep pullbacks, right? Maybe trap in some bears down here for a nice deep pullback, right? Small risk, high reward trade, and breakouts, right? And again, I've got two types of breakouts going higher here, and we'll talk about those as we go. Now, let's cover my favorite trade for tomorrow. Now, as always, right, I'm not sure if I'll get it, but I like to visualize and kind of game plan what my favorite trades are each day because that way I'm more confident, I'm patient to wait for them. My students do a lot better in our trade room when we kind of map out what our favorite trades are before we take them each day. Now, there really are probably two ways, right, two basic ways you can trade this deep pullback, okay? Now, one of them is the one we see the most, and this is if I get a deep pullback here, this becomes relatively bearish in the short term. It can be difficult to pick a bottom, right, on those deep pullbacks. Now, in my free trading course, I talk about a failure setup. Okay, this is where a failure pattern would work just perfect, right? Just like you guys are learning in the free video series. So if we get a deep pullback, again, I want to be a buyer up here, but my favorite way to kind of buy these pullbacks is to trap in the sellers. In other words, when they try to get short into that moving average, right, the 21 EMA, my favorite trade on this is to think about where their stops are going to be and use their stops as fuel, right, for a run back higher. You probably have learned this lesson the hard way like I did long time ago. It can be difficult to pick the bottom on that. So rather than trying to pick the bottom, I just simply wait for the pullback, let the bears try a couple times, and then use my failure pattern, my failure setup, in this case it'd be a 2-try failure, right, to run some stops, because when sellers are caught, they get squeezed, right, and that produces often a short squeeze. Now, if I really get kind of the dream come true tomorrow, what will happen is that we'll get what we call a failure into pullback combination, right? A failure into pullback combo. These are pretty easy, right? Again, we get below the moving average, down a support area down here. We trap the bears in. We use their stops to get the party going for the buyers. And then one of my favorite follow-ups is a pullback setup, which will usually come, like imagine a channel off the highs here, right, off the low like that. I teach this stuff, by the way, in that free trading course, right? You guys are learning this right now. So a failure into pullback combination. And again, we're trying to go back into the range and ultimately go back up and take out that high, right, for some targets. So that would really be one of my favorites. Now, this is kind of the dream scenario, right? Let's talk more reality, okay, right? Because we don't always get that perfect dream come true scenario. Sometimes there are so many buyers down here, okay, that when we get down there, it V bottoms and just bounces right back up. You know what I mean? Again, I would love to get that deep pullback, trap the bears in, use stops as fuel to time the entry, right? We talked about that. But hey, if that doesn't happen, sometimes what happens is sometimes it'll pop right back up and begin to grind and go higher, okay? If that happens, the key in this is the market wants to go back into that range, right? Don't let these fool you, okay? These are just asking for you to FOMO in, right? The fear of missing out, and buy too high. If it V bottoms and begins to grind higher, this is very, very easy, and we'll do this tomorrow morning in the trade room. We'll go out and look for traps. Right? Traps are always my favorite trade whenever I'm worried about buying too high, right? Again, I'd love to buy that nice deep pullback, but if we don't get that, right, that failure is to pop up and grind higher, that trap, right? That trap is a money trade, right? It's a great trade. Also, too, and we talk about this in the free course, if you draw a trend line off the highs like this, right, bring it down off that low, if I can combine that trap off the low of that channel, that is a beautiful trade. Now, I teach all about traps in our free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned about all the failures, the pullback combos, and the traps. But if you're one of the few folks who are watching right now who haven't taken that free video series yet, not to worry. I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that free video series will show you a stupidly simple trick to know exactly where the best winning trades are going to be each day, and I'll help you start making money on your own account by teaching my 4 favorite entry patterns. If you are missing the best trades each day, if you're taking too many losses, take that free course. It is perfect for someone trying to make the jump into full-time trading. I have hundreds of examples of failures, pullbacks, trap setups, and everything in between. You're going to love it, right? So grab that link. I'll also put all the links you guys need linked up in the description of the video as well, all right? So both on the S&P and the NASDAQ, let's get that nice deep pullback, right? Let's get that. Let's trap in those bears and run this thing back up. And what would it look like to be a reversal, right? Before I jump over and talk about the move going higher, because I want to talk about that next, right? There's 2 kind of core principles to be a buyer there. How would a deep pullback, how would that become a bear market? They'd have to hold the pullback and really jump off that moving average, okay? So remember, right, if we get that sharp pullback here, don't let the sharp pullback fool you. Okay, the bears have a very difficult job right now. They have to hold that pullback, right? And they have to jump, right? And really give us a strong reaction off that moving average. See over here, right? See how the buyers, they go up and they jump off the moving average? Yeah, we have to see something like that, even stronger for the bears, all right? Now, if they do, right, if they can get it, if we can get that deep pullback, right, if the bears do come out and hold that pullback and jump off the moving average, okay, well, now we'll regroup tomorrow morning in the trade room, right? We'll go out and find some new channels off the low, up around the high, right? And we'll begin looking for entries off the high of that channel. All right, we call these 1, 2, 3 reversals. But again, the most important thing is we have to get that strong jump off the moving average. All right, It doesn't look very likely right now, and you'll see right on the 60-minute chart, we've got plenty of room overhead here. So the NASDAQ is the one that looks most likely to give us that big correction here. So let's talk about that next, right? So what if we go higher here, right? I've got two basic fundamental ways to trade the move going higher. Let's talk about this now on the NASDAQ. The NASDAQ is very similar to the S&P. There's actually one key difference between the S&P and the NASDAQ. If you go down the description and grab that 60-minute chart linked up for the NASDAQ and the S&P, you will see right away, right? The NASDAQ is running into some very significant tops, right? They're kind of back at these highs. The S&P would love to get to tomorrow, right? The S&P is trying to get where the NASDAQ currently is, okay? Everything else it's somewhat the same. It's very, very similar. All right. Let's talk about why I say that. There are again. Well, there are two basic principles, two kind of key components on the NASDAQ. The first one is again that very strong move, right, that we see here. Now, whenever I see a real strong move like this in one direction, you'll notice there's not exactly a range yet. Right? The S&P had a pretty obvious range. The NASDAQ, not quite there yet. So this is basically a very strong move. Anytime we see a strong move in one direction, what do we always talk about in our free course? Right? We talk about strong move, we pull back, and we what? Want to retest the high. Okay, so as we always say, whenever we see a strong move, we want to buy a pullback, retest the high, and we call that mission accomplished. Okay? Now what? Okay, this is the big question in everyone's mind. Now what, right? Do we go higher? Do we see a breakout going higher, right? Like the S&P might have a breakout going higher. Because at this point, it's not a very good spot to be a buyer right now. Okay, momentum is very bullish. There's no doubt about that. We're a very bull market, but a horrible location to be buying. Where do you think the buyers would like to buy more? Right? What do buyers like to do? Buyers like to buy low, right? They want to buy at support. So I would imagine that if we don't see a breakout going higher, where do you think there are more buyers waiting? Probably not in this area, right? That isn't a place to get a small risk, big reward. Exactly right. The buyers are probably waiting somewhere down below that low, right? That way they can take a small amount of risk, right, for a relatively big amount of reward. Okay, now you combine that in with the idea that we're in some major highs over here. And like I mentioned, the NASDAQ seems to have a little more likelihood, a little more potential for a relatively sharp correction. So let's clean this off a little bit here. I'll put them back on here in a moment. Now, the next thing is if we don't, right, if we keep going higher here, right? If we keep going higher, just like the S&P, we have to get a little bit of a punch. Right? We've got to get some proof, right? As I always say, the breakout needs to be quite convincing, right, to go higher here. You see that measured move I have there, 1 leg, 2 leg, 3 leg right there. And the good news is the NASDAQ has just a football field worth of space overhead. In fact, we don't start running into anything until 14,000 up there. Okay, the daily chart will give you a good idea on that one, the NASDAQ. So we find ourselves in a relatively different situation than the NASDAQ, but the same kind of game plan, right? The same game plan. We still would like to get that sharp correction, mainly because we don't want to buy right here, right? We're into resistance. We're still bullish. Again, no doubt about that, but we're in not a very desirable area here. So, right, so again, even if this is a range right here, we still find ourselves in the same game plan, right? I would still like to get this thing to drop. I would still love to get this thing, again, below some of these prior swings. Really, it could even go as low as this 13,173 area. Okay, we oftentimes see that was a range, right? Prior range levels oftentimes act as magnets and for a breakout pullback. Right, so we could go as low as this 13,173, just like on the S&P. I would love to see a nice deep pullback. I would love to trap those bears with a failure pattern. We grab that pullback combination, go back into the range overhead. Or if it V bottoms off the low, right? Don't chase, right? Wait for those trap setups. Okay, so we talked about that earlier on the S&P. I don't want to bore you guys too much with some repeating it, although we know how valuable repetition is when it comes to learning this stuff. So now, two components. right? Two components going higher. Let's talk about those two components. Okay, first thing is we need to get some convincing breakout going higher. And again, it's not just for the NASDAQ, it's also the S&P as well. Okay, now as we're going higher, we could easily rip higher. We easily could. These markets are wild right now. And if we do end up ripping higher here, the trade you look for is a bear trap. I mentioned this in the introduction, right? Trapping sellers, right? Trapping sellers below the moving average on a pullback, right? And then now this is kind of the traditional trap setup, right? We talk about this in the free video course, right? So a trap setup as we go higher. Okay, so if we get a pretty convincing break going higher, all right, it could easily happen. Remember, my job is not to predict. My job is to prepare for no matter what we get, right? If you predict, you can only make money a couple ways. If you prepare for different scenarios, you're ready for anything the market gives you, right? At least that's my way to do it. So as we go higher here, remember, think about these traps, right? And we talk about this in the free course. Strong move up, right? Strong move up, shallow pullback, higher high in price. Okay, remember, not this one, right? Not this one. Strong move up, shallow pullback, lower. Right? No, right? That's not it, right? Watch closely again, right? Strong move up, shallow pullback, higher high in price. Okay, you need that higher high in price because that creates that swing low, and that's where traps are going to be. Okay, traps are, again, they're a money trade. They're very, very good. Okay, that's one part of the equation for a breakout. Now, at some point, we're going to get a little bit too high up here, right? At some point, we'll kind of reach the peak, not the peak, but we'll get too high to buy. In those situations, now we want to look for that deeper pullback, okay? And in these cases, you want to think about what was that prior high? Think about marking that area, this area, right, on the chart. Now, what I'll do usually is draw a trend line off the highs, okay, bring it down around that low, and start looking for entries down around this area, right, around the low of that channel, using those prior highs, using lows of a channel, and most of the time, these are going to be that failure into pullback combination. Right, we'll get below the 21 moving average. The bears will come in, try to short this thing and take it lower. Right, again, we're very bullish overall on the 60-minute chart. We're also bullish in this example on this 6,000 tick chart, and we can use that bullishness to trap in those bears with a failure pattern, right, and then failure, pullback, strength move, trap, right? We call this the price action cycle. You guys are learning this, of course, in the free video course, right? So any of the patterns you guys are learning in that free video series, okay? So again, just to kind of recap here once again, right? If we start ripping higher, remember, has to be a very convincing breakthrough for the NASDAQ and the S&P. If we start ripping higher here, watch those traps, right? Strong move, shallow pullback, the higher high, we need the higher high, right? The higher high is critical right now because that's going to give you that trap setup. Okay, the higher high basically tells you it's not just some fake out breakout back into that range. Okay, so you want that higher high in price that will give you that trap setup going higher. And then again, after we push up a little bit, and we'll talk about what I call 1, 2, 3 moves tomorrow morning in the trade room. We'll kind of figure out how far is too far in the trade room. And then once we get up there, right, we go, okay, so that was the prior high. That would be the ideal location for a nice deep pullback. And why would you think the market wants to give you a deep pullback? Because we're so high up. Right, we had that big one Friday. Eventually, we'll dry up the buyers up here, and at that point, find those bigger channels. Right, find those bigger channels. I'll go out, right, start looking for larger channels, get those deeper pullbacks. Right, again, get underneath the moving average, and literally try to trap in the sellers. Right? Trap those bears in, right? Got prior highs acting as support in this case. Get below the moving average, those failures, those pullback combos, which you guys are learning in the free video course, right? So again, short term on the way up, looking for bear traps on the way up, right? And then as we get higher up, we don't want to buy. And again, right, look for that deeper pullback off a larger channel, all right? And again, these are the principles for tomorrow. We're probably going to see some variation of this, right? And that's why we have our trade room. Unfortunately, I can't predict the whole entire scenario, but at least those are the principles you should be watching here for tomorrow. And of course, we'll trade this stuff together tomorrow morning in the morning trade room. All right, guys? So now we've got I think a pretty good game plan here on the NASDAQ and the S&P for how to trade the pullback, right? How to trade the breakout going higher, right? So pretty excited about tomorrow. Hopefully we can get a little more personality than we saw here today. How about some oil? Oh, we saved the craziest. We saved the craziest for last. Yeah, oil definitely feels a bit off its meds right now. That's for sure. Oil, of course, is trying to find some balance right now after that big move that we saw, last Tuesday, Wednesday, right? I would definitely, if you're not familiar with the oil chart right now, I would definitely go down the description of the YouTube video, check out the 4-hour time frame. The 60-minute still even a bit too wild for me. Grab the 4-hour chart linked up in the description, and you'll basically see oil made this huge, I mean, look at that thing, right? This huge kind of irrational, panic sell-off last week. And so it would make perfect sense that oil has to pull back a little bit here this week, right? Last couple of days, really. Why? To attract in more bears, right? Markets make these big moves down. The bears are not going to want to sell down here, right? They're going to want to wait for a deep pullback because, remember, anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest of that level. So we're basically now, it feels like right now, and you'll see in a moment, it feels like we're starting to get up around that area now. Right? We're starting to get high enough off that low. And again, because that move down was just so incredibly large, it's no surprise we've made a really, really big correction. But tomorrow may be the day where that turns around here, right? That may be coming to an end here for tomorrow. And the reason I mention that, right, is because you'll see here, there are kind of two big keys here. One, of course, is the measured pullback. Measured pullbacks are very, very common. Again, big move down, right? Nobody wants to buy way down here. And that leg off the low, if you simply double up that leg, we talk a lot about measured moves in our free trading course, right? This is kind of a creative way to use a measured move, okay? So that alone by itself is pretty good resistance. Well, you'll also notice too is that we have this range, right? That, it should come at no surprise when you see a big collapse like that. The market kind of treads water for a little bit and goes into a range. I can take that trading range, I can project the amount below it back above it, and I'll tell you, we call these pendulum swings. These are, as you learn in my video classes, these pendulum swings are one of the most useful tools for finding good entries and exits and turning points when there's a range on the chart. All right. So we're definitely at a very curious area of resistance. In fact, we're almost all the way back to that pre-drop low. Again, you'll see what I'm talking about on that 60-minute chart linked up in the description. So let's put it this way: we're very bearish in the short term. We're very bearish in the long term. We're sitting at quite a bit of overhead resistance. There's a range below us. You have to think the bears are going to come in and sell this thing back down again. But the big problem is this bullishness, right? We're very bullish in the short term. And remember, anytime we see a strong move in one direction like this, we have to respect those buyers and anticipate they're going to try to keep this thing going, right? This could easily get bought up and keep on going higher. So I'd like to be a seller on the oil. I'd like to go back down into this trading range. But when you have a situation like this, where we're very bullish in the short term, it's a little bit like stepping in front of a freight train, right? You can get run over pretty fast. There are really two basic principles, two basic ways that you can sell a market like this, okay? One is to pick a top, okay, and use what I call a crown reversal pattern, okay? Really my favorite reversal pattern, I call it a crown reversal pattern, okay? So that's one way to do it. You can try to pick the top. And remember, when you try to pick a top in a bull market like this, you need to be at some level of resistance, see signs of exhaustion, right? Buyers once, buyers twice, right? make sure the buyers are trying to keep it going higher. We have to assume they're trying to keep it going higher here. And then the third thing is we need some sort of catalyst. We need some sort of stop run, right? Because momentum is so strong in this situation that it can be difficult to simply get this into turnover, okay? So one way to short this thing off the high, which is, I will say, the most aggressive way, right, is to pick the top and to use what we call a crown reversal pattern, okay? It's basically a two-try failure, right? It's buyers trying once, it's buyers trying twice, and then looking for what we call a trap, right? A trap setup or a trap signal, right, off just a little bit above that high, all right? And ideally, you want this to be a really convincing signal. That way, any of the buyers who have a stop sitting down here, those stops will get rung, and when you're long, you get stopped out, what happens, right? It'll run this thing back down into that range. All right? That is one of my favorite trades for tomorrow in the oil. It is not my favorite trade, though. That's a lot of bullish momentum. All right. So if we get something like this, this is one of those trades where you go half size, right? You go third size, quarter size, right? What I always tell my students is when you're trying to pick tops and bottoms, you don't need to use a full size position, because if you're right, it's a huge win. You'll make up for that smaller position size. Okay, what is a lot more reliable trade, and this of course is the second way to do it, is to wait for momentum to turn, right, and then go looking to short the first pullback. Okay, now the downside to this obviously is that you don't get that big, you're not going to get as big of a chunk of profit off it, but the odds are so much better on this. Okay, these are more of a full size position type of trade, right? You're not going to get as big of a profit, per se, but the bigger position size will make up for that smaller profit. Remember, there's no free lunch in trading, right? There's no free lunch. The bigger the reward, right? The better your risk reward ratio is, the more difficult it will be to get that trade to work, okay? Because momentum. Okay, the less attractive, right, your risk reward ratio, right, assuming it rolls over and then you pull back, right, the less attractive, okay, will give you better odds of success, right, because you've already got momentum on your side, right? There's no magic bullet, you know what I mean? There's no free lunch, okay? So how would you do that one? With these types of moves, what oftentimes happens is this. The market will shoot lower and begin to grind down, okay? And when that happens, the range is a magnet, okay? That's kind of the objective now, get back around 68.5, 68-ish. And the key is, if it just rips going lower, what do? We start looking for a new channel off the low, up around the high, and we start watching for swing highs, and we go after traps. Right? This is, and again, not as desirable, right? Certainly not as desirable as a pop up, 1, 2, right? That trap, okay? These are the two entry patterns you look for. Again, two basic principles in this scenario. And that is a bear market overall, but a very bullish market in the short term, okay? Either I wait for the turnaround, right? Wait for that momentum to turn for me, and then look for any entry pattern, right? Again, I love traps. It could be a trap setup. It could be a buyer failure pattern, like you guys are learning the free course, right? A pullback combination. So anything off the top of that channel, okay, again, momentum is on your side at that point. So it's, again, better momentum, but not as much reward. Or, right, you wait for the buyers to go up, right? They're running into overhead resistance. Let those buyers, right, dig their own grave here. Their stops are sitting right there, and you grab that, again, that kind of bull trap entry pattern, right? We call this a crown reversal. Again, on this one, a heck of a lot more profit potential. But again, because momentum hasn't turned yet, right, you're not as likely to get, right? That pattern right there is more likely to fail. Right? So you go with a smaller position, because if you are right, you'll make up for, right? You'll make up for that smaller position. Right? Now, clearly, if we're lucky, right? If we're lucky, we'll go up 1, 2, right? Get the crown reversal, then pop lower, go lower. I mean, don't get me wrong, right? We might get both of these tomorrow, and you're going to finish that off like that, right? Find that new channel. Notice how I draw the channel, right? I draw the channel off the lows, right? And then bring it up around these bigger highs. Okay, that's the key principle you want to think about, and then that's where the entry will be. Okay, likely will be. Obviously, we can't predict anything for tomorrow, right? Especially with that big news report or that big meeting tomorrow for noon. All right, guys. So trapping traders in, right? Let them try once, try twice. When that bull trap, that crown reversal, and then who knows? Maybe the gods are watching on us here this evening. Maybe we'll get lucky and roll over here, grind down, and get that finishing touch right on the way back down into that trading range. All right, guys. Now, remember, too, these are only a couple of the trade ideas or the trade setups we'll be tracking tomorrow morning in our trade room. Unfortunately, I can't cover everything in these videos, but now you know my favorite game plan for tomorrow. Now we'll see how the overnight session goes. Tomorrow morning, though, 8 o'clock Eastern time in our trade room, if you're looking for a great place to come out and learn and trade along, we trade together every morning at the opening bell. I'll put all the membership links. I'll put all the free trading course links. I'll put all the higher time frame links. Everything you'll need is linked up in the description. If you need any help at all getting into membership or the free video series, don't be afraid to call the office. I'm always here to help out, so don't be a stranger. I'll be here to help out if you call the office or use live chat as well. I'll be here to help out if you guys have any questions along the way. All right, guys. Hope you enjoyed the video tonight. Get a great game plan for tomorrow. Now we wait and see what we get. In the meantime, have a great rest of your evening. Hopefully, I'll see you tomorrow morning in the morning trade with members. If not, we're going to come back tomorrow night and get ready for CPI Wednesday. All right, guys. As always, thanks for watching. Thanks for being here. Hope the day went well. My name is Joseph. Be well, be nice to each other, and I'll see you next time. Adios, amigos. Bye-bye for now.